Good evening. Welcome to the third quarter results update of Het National Bank. As usual, I'll start with a small presentation and then open it up for questions. Starting with the bank numbers, as you would see, NII has grown by 15.5%, fee income by 11%. Trading gains had losses from trading gains or more. The cost of swaps have reduced from 2.8 billion last year, 2017, to 1.2 billion. Net gain from financial investments have gone up slightly. Other operating income has also grown as a result of exchange gains that were made during the period. Then impairment has moved up significantly as witnessed by other banks and the industry as a result of rise in NPAs. Overall, net operating income has grown by 18%. Operating expenses have been contained fairly well at just 10% increase. Taxes have gone up. Overall, profit before taxes has grown by 25% and PAT has grown by 20% for the bank. Similarly, at a group level, NII has grown by 14%, fee income by 9%, net gain from net trading losses down in line with what the bank has witnessed. Net insurance premium has gone up by 18%, other operating income growing by 42%. Impairment is up again for the group as well. Operating expenses are contained at 9.7% overall. At a PBT level, group has done 28%, PAT 22.7%, and also at profit attributable to shareholders, growing by 22.7% to 13.9 billion for the 9 months. So this shows how 2017 PAT of 10.9 billion has moved to 13.1 billion, contribution coming from NII 4.6 billion, net fee income 700 million, and other income by 2.2 billion, while impairment has increased by 3 billion, OPEX by 1.5 billion, and taxes by 2.4 billion for the bank. And more or less similar trend in the group as well. So going to the balance sheet, overall for the year, loans have grown by 12.3% and deposits have grown by 10.7%. And you would see the CAGR over the last 5 years for the bank advances or asset growth has been at 18.6%, and at a group level 19%, and at loans and deposits CAGR of 17.3% and deposit CAGR of 18.7%. So NIMs have started to improve. Bank NIMs have gone up to 5.3, and at a group level NIMs have gone up to 5.7 as a result of increase in interest rates. And similarly, on the lending mix, we have seen a slight shift in the lending mix, more into retail and SME, where retail and SME has increased to 56%, while corporate has come down slightly to 44%. CASA percentage has remained more or less at 36% compared to FDs at 64%. So this is how the fee income has grown. In the past, fee income growth CAGR has been higher than what we have seen this year, but we are confident that we'll be able to increase fee growth going forward, especially on credit cards, trade, as well as electronic banking. So our operational excellence and driving cost, the initiatives to drive down productivity or drive increase productivity has continued to yield uh, results. You would see cost to income ratio improving by 400 basis points, both at bank and group level. At a group level, cost to income ratio is at 43.9%, while at a bank level, it's down to 36.9%. MPAs have started increasing as of 30th September 2018. Gross NPAs stood at 10.1%. So this is a Basel requirement. We need a minimum tier 1 of 10% by 2019, but as of now, with the capital augmentation, you see that we are fairly comfortable at 13%, while total capital adequacy ratio stood at 15.6%. ROAs have continued to do well. Our ROA at a bank level is at 1.76%, while at a group level it's at 1.84%. But due to the capital raising that we did, ROEs have slightly come down, but we are still maintaining it at a bank level at 15.6% and at a group level of 14.6%. So this is the DuPont analysis at a bank level in terms of how the ROE composition and how each of the lines have contributed towards the ROE. And we are confident that NII, other income, impairment, operating cost, all will help drive ROAs, and as well as we'll be able to leverage a bit more over the next couple of years to drive ROEs higher. So this is the DuPont at a group level. So in terms of shareholder returns, this has not been the best period for the stock market, but we have continued to do well despite price to, so the share, if you look at the price to book value, you will see that it's trading fairly at attractive prices at this point. P is at just 5.84. We have continued to give a dividend yield of almost 4% for the voting share and over 5% for the non-voting share. And the voting share drop for the period or the return for the period has been negative because of the drop in share prices as well as for the non-voting. So these are some of the awards that we continue to win as one of the best banks in Sri Lanka, actually rated number 1 bank in Sri Lanka by the Banker magazine, and as well as some of the local magazines as well. So that's the short presentation. Let me pause at this moment and start taking any questions. There's a question, will there be a tax reversal in Hasu next quarter, boosting group level profits? There won't be any tax reversals, but I think the insurance industry had a one-off gain. Almost all the insurance companies had a one-off gain, which I think you would have already seen. And Hasu as well in the first quarter had a fairly large one-off gain that came through. I believe it was something in the range of 400 million, 360 million. So there's a question on which sectors are you experiencing high NPA pressure? I think it's fairly, I think we have seen in various sectors, mainly in agriculture, where we have seen NPAs moving up. We have seen NPAs moving up in construction sector, mainly because there are cash flows that are not coming through from some of the government contracts, so that we have seen. But in general, trading and manufacturing as well, we have seen slight increases in NPAs. So, out of the loan book, what is the percentage of floating rate loans? I would say uh, out of all the loans, around 80% of the loans either repriced within 1 year or get repaid or matured within 1 year. So it's a so 80% of the loans you can say has a duration of below 1 year. So there's a question on the current situation, how it could impact the banking sector. I think the impact would come in terms of growth. We were expecting that next year things the economic growth would be much better, but until you probably see uh, some stability and some solution to the political crisis, I think growth is going to get affected, and therefore loan growth will also get affected. And in addition, I think you would have probably seen the downgradings that have happened by Moody's. So that also, um, though we don't see that as a major impact because the banks are not really going into the market to borrow. For the country, that might have an impact in terms of going to the market and borrowing. So that could be that may have certain offshoots that would may have impact banks as well in terms of raising funding, where the funding cost can slightly go up. So there is a question, I think the Moody's question I asked, there is a question whether that's going to increase collective impairments. I don't think it's going to have increased collective impairment, but of course there can be an impact on borrowing costs, but that also we don't see a significant impact immediately because we haven't gone to the market to borrow. Most of the borrowings we have are with DFIs or bilateral lines, so those normally don't strictly go by the ratings, and the most of the borrowings we have also are long term in nature, but there can be an impact on short term treasury borrowings where the pricing may go up slightly. uh, but other than that, on the long term foreign borrowings, we don't see significant implications. So, the question on loan book growth, I mentioned that more than the rate hike, the I think the uncertainty is affecting loan growth. So, if until we find a solution for the political crisis, there might be a bit of a slowdown overall in the economy, and that will have implications on industry loan growth as well. So there's a question on what are the USD denominated borrowings at the moment. So we have, I would say, close to about $500 million, I guess, borrowed in foreign currency. It doesn't have an impact. Exchange rate movements will not have a direct impact on those borrowings because all those borrowings are swapped. And the movement in that swap rate or the cost of the swap is what you see as a net trading loss. So there won't be an immediate impact, or there won't be an impact, or there is no open position to have a P&L impact of exchange rate movements because of the foreign currency borrowings. But of course, if the if the swap cost remains fairly high, then any new borrowings, the cost of doing the swap is going to be higher. Well, there is a question on the 7% debt repayment levy that was discussed. Unfortunately, that has come through and that has been gazetted, and the likelihood of is that that 7% will have to be paid starting from October 2018. Then there is a question on uh, there's a question on senior citizen amount that is payable by the government. At the moment, I don't think we have got a commitment as to when that payment will come, and we'll have to wait and see with whoever is going to continue with the government. The negotiations will have to start in terms of getting those payments. So there's a question on rescheduled loans. Our rescheduled loans are not too large. Believe it's about 2-3 billion rupees and not more than that. So there's a question on do you think the NPS could further increase? We are focusing significantly in the third quarter in bringing down NPAs, and we are confident that we will be able to bring down NPAs in the third quarter, in the fourth quarter. So um, our expectation is for NPS to reduce in the fourth quarter, and I think there's encouraging signs in October. So we will try continuing our recovery mode to ensure that we bring down the NPA rate from what you have seen as of 30th September. So what is your provisioning expectation for fourth quarter, and do you have any new loan limit on new sector? Uh, uh, it'll be difficult for me to give an impairment expectation at this point, but as I said, if we are able to bring down NPA significantly from where it is as of September, we might be able to reverse some of the provisions that we have done up to third quarter. But at least we would not expect a significant increase from what you have seen as of third quarter or for the first 9 months. So there is a question on interest rates and NIMs. With all what has been happening, I think interest rates have also started moving up. You would have seen AWPLR surpassing 12%. It's around 12.4% at the moment. So rates seems to be in an upward trajectory, especially with policy rates also moving up. And that actually will help NIMS also to move up, and we have seen NIMS improving because of rates going up, and I expect that trend to continue at least for the next 6 months. So there's a question on whether the SRR reduction will lead to higher loan growth. Um, Well, I think there needs to be significant demand in the economy also for the loans to grow. So I guess already the money that was released through SRR has been absorbed in, and even with the release, you still see the market being short. So I don't think that's going to really be a significant driver of loan growth. So agriculture sector has done well in terms of the rains have been good, and and we have seen that the harvest is improving. But to see significant cash flows coming through, I think we might have to wait a bit longer. But the vibes that we get from the ground, from the branches that are in agriculture, predominant agriculture areas, is positive. So this question, what is the NPA from HNB Finance? HNB Finance, if you look at their normal NPA is classified over 6 months. I guess that's about 4% plus. And if it is over 3 months, I believe still that is around 6.5 or in that range. So it's not significantly high compared to the type of business that they do. Did the rapid depreciation of the rupee aggravate HMB's NPLs? No, I don't think so. It didn't. So, any significant NPS coming from SMEs? Yeah, we have seen NPS increasing from SMEs. We have seen NPS from corporate and PFS as well. So, I wouldn't pinpoint and say that most of the NPS came from SME, but I think it's spread across all three segments: corporate, SME, as well as retail. The question is whether there can be further NPAs from the construction sector, given that the political scenario and the payments may get further delayed. Um I would think there can be still a few that can go in if the cash flows don't come in, but I guess most of the people who were unable to pay have already gone into NPA because of the cash flow issues. The larger contractors, of course, have their own other cash flows that they can manage with, but the more that we have seen is the small timers who do subcontract, who really rely on these cash flows coming in. Those are the guys who have more gone into NPAs larger than the rather than the larger guys who do these contracts. So there's a question: what is your exposure to the construction sector? I think I had a slide here on the exposures. So the construction sector altogether, including infrastructure, is about 18%. So if there aren't any other questions, thank you very much for joining this WebEx call, and hope to see you all, hope to catch up with all of you all with our year-end results somewhere in February or March. Thank you very much.